Hello everyone, welcome to the daily market updates video, and today I am changing this series to weekend series, and the reason is once we have the Fridays close, then we have a lot of weekly confirmations as well. So I thought, why not create a video in which I give daily market updates, and on the weekend I create a broad range of topics and also give you a larger perspective of my take on markets. So welcome to the weekend series, and this is my first video on the weekend. So talking about the markets, we have closed this week in a very bullish manner. And as you know, this is a seasonally strong period. The closing of the week is very, very important. I was under the impression that once the Fed announces its results regarding the interest rates, and once we settle down, the dust on Thursday, we will have a, good digestion 2 days. But the thing is, market still wants to go higher. So let us analyze all this with our technical analysis and also later on with the fundamental analysis talking about the macro. So diving deep into the analysis, I wanted to discuss, few things. First is the way I structure these videos is I go from a broader time horizon to the most narrow time horizon. And don't worry, I will be, creating a training and education series videos in which I will show you what are the chart platforms that I use, what are the tools that I use, and how you can configure those things to your machine. So with that, starting with the weekly time frame. In the weekly time frame, I wanted to, emphasize on three important points. One is the support levels and the other is the all-time high level. So let me show you all of this in charts. So this, as you can see, is the weekly time frame chart. And the first thing is, that I wanted to, show you is look at how much time we have taken to come to the all-time high again. So we actually reached the all-time high back in 2021 November. And after 2021 November, as you can see, there was a heavy fall in 2022, and then there was a heavy recovery in 2023 as well. And then now finally, we are breaking out with large amounts of volume and with very high conviction. So let me tell you, why do I say this? So in technical analysis, there is a pattern, there is a chart pattern which is named as cup and handle. So what does the cup and handle mean? The cup and handle means this is what you see is the cup, and this small U-shaped thing is called as a handle. So normally when this thing happens, this chart pattern, historically has resulted into a very big bullish moment. So I'm not saying that we are going to see, very, very big moves on the upside immediately. But what I'm trying to show you is the macro picture, that is a broader time horizon picture in which we have successfully broken out of the all-time highs, and we have a very large, cup that is being forming, and this is the handle that is being forming. Now remember, all these candles are weekly time frame candles. That means this is a very large time. We are talking about 2021 to 2024 almost. So almost 2 to 3 years. So this is a very bullish development. This, of course, the next target would be 20,650, but the time that it's going to take is almost 6 months to 1 year. So be very, very patient, but I just wanted to give you a very high level gist on the, very long or broader time horizon. Like, this is what is happening. We went through COVID, we went through the fastest rate hike cycle, and now the only risk on the very, very broad time horizon is that if we can avoid a recession and if the Fed can engineer a soft landing, then that would be cherry on the cake. So talking about the technical analysis of weekly time frame, we are still overextended. I will not say overbought, I am saying overextended. So we are overextended on the upside, and the initial support is the upper Bollinger Band that is lying at 16,566, and the initial support lies at 5-day EMA, that is this blue line, that is 16,200. Now my personal take on it is, if the markets decide to pull back, then the support that it's going to hold is this 5-day EMA. I personally don't think that, we will go below, 5-day EMA for coming 2 to 3 weeks, but we'll see what happens. This is my analysis on the weekly time frame. So now let us draw our attention to the daily time frame. And in the daily time frame, I wanted to discuss these important points. So let me show you each one of these in the charts. So first point is, right now we closed very, very near to the Bollinger Band, that is the upper Bollinger Band. So if you go to the daily charts over here, in the daily charts, as I said, that the Bollinger Bands will act as a support. So, and many a times what happens is when the price is overextended on the upside, it also acts as a resistance. So yesterday, that is on Thursday's session, what happened was the Bollinger Band acted as a support and the price closed above the Bollinger Band. And yesterday, that is Friday, what happened is Bollinger Band acted as a resistance. So as you can see over here, if I zoom in, the daily market action or the Friday's daily candle, what we did is we tried to, close above the previous day's high, but we were not able to. So notice this pattern. So over here, we are making a wicks on the upside. Over here, we are making wicks on the upside. What does that suggest? That suggests that prices are trying to go up, but the sellers are so dominant that it is pushing the prices down. So these kind of, upper wicks, the development of these kind of upper wicks is a signal that buyers are getting exhausted and sellers are stepping in. Now, this does not mean that, we are going to see a heavy pullback or we are going to see a heavy correction. All I am saying is, for the time being, the buyers are exhausted. So that may result into a consolidation also, and that may result into a pullback also. So let me give you a scenario. So if the market decides to pull back, then the first level of support is going to be this 5-day EMA, that is the 5-day moving average. And my final level of support for this month is going to be this anchored VWAP, the white line that you see over here. That is going to act as a very good level of support if the market decides to pull back. But the problem with this thesis is we are into a seasonally very strong period, and the probability of that pullback happening is very, very low until we receive some very bad news or the very bad economic data coming out. That may result into, this scenario of testing of the 5-day EMA and finally of the white line that you see over here, that is anchored VWAP. And as far as the upside is concerned, for the upside, we have a very low data. Like we don't have, a data since we are sitting on the all-time highs. We don't actually have a lot of data or important levels on the upside. So if the market decides to go higher and if it keeps on charging higher, we don't have a target or an important level to plot on the chart to see where it can go or how long it can go. So right now, my thesis is it is going to consolidate in this range for a little bit of time, at least for, coming week or so. If this consolidation happens, then that I would conclude that as a very healthy consolidation, a very healthy digestion of all this astronomical gains that we have had, in past 15 days to 1 month. So it is very, very normal for the markets to consolidate and digest the gains and then go higher. So that's my thesis on the daily time frame, that the support level still is sitting at 5-day EMA and the anchored VWAP, and the Bollinger Bands are going to normally now act as a resistance rather than a support. So that's my thesis on the daily time frame. One last thing that I wanted to show you on the daily time frame is very, very important. So let me show you what do I mean. So I asked myself a question that, okay, we are, breaching all-time highs and we are charging higher with the astronomical rally that we have seen since the late October. So the question that I asked myself is, where is the institutional buyers, will be interested if the market decides to pull back? So one really good trick that I found out is if I take the lows of, October 26, that is the lows of the almost, within the last 3 months. And if I take the highs of right now, that is current highs, and if I draw a volume profile which is this. So as you can see over here, pardon me for a lot of complexity, but this is a volume profile which is specifically for the period starting at 26th of October to 15 December. So as you can see in this period, like the highest amount of volume, that is the POC, the point of control, is sitting over here at 15,900. So my very strong support, if you ask me, where I will be buying, I will be a heavy buyer, is still sitting at 15,900, and this is coming out of purely volume based analysis. That is, like, if you see this rally, where is the most amount of volume has happened. So this is my take on the daily time frame. Let's say if the market goes down, or let's say if we have even a meaningful pullback, then the best point of entry or the best point of interest in terms of volume is going to be this red line, this level that you see over here, which is sitting around 16,000 level, that is 15,900. This will be a very lucrative level if everything goes right, and this is exactly sitting at almost let us say here to here, that is 5% or 5.8%, which is a very healthy normal pullback. So I would say this pullback, because it is less than 10%. 10% is a correction range, but this is my take on daily analysis, completely based on volume, because we need to know where the most amount of transactions has happened and where is the probability of the change of interest. So the buyers will be really active in this zone if the market decides to pull back. So that's my take on daily analysis. And now let's jump to the intraday analysis. So now let us jump right into the intraday analysis. In the intraday analysis, I wanted to discuss two important points. Those two important points is, the first, it was a quadruple witching day, quad witching. Now what does that mean? On Friday, there are 4 types of options, futures, and derivative instruments that expire. So why does the expiration of these derivative instruments matter, and why should we know about it? Because whenever the expiry day happens, a lot of positions are closed, and a lot of positions are impacting the markets. So for example, if there are 4 types of derivative instruments that are expiring on a single day, that will have a huge volatility into the markets. So that's why we need to be very cautious about trading intraday in the quadruple witching days like these. So normally in the year there are only 4 quadruple witching days, but we need to be very cautious when we are entering into a day trading of especially on these days. So when you trade for let's say a reasonable number of years, you come to know that there are certain days in which we don't necessarily have to trade, or I wouldn't recommend trading on those days. And those days are like these: quadruple witching day, or the CPI data release day, or the FOMC day, or the Fed meeting day. All of these days have a very huge amount of volatility, and there is no premium in the session, or there is no incentive in the terms of risk to reward ratio for the traders. So I out of my experience, I normally refrain from trading in these days. So that's all about quadruple witching. So now let us jump to the chart analysis of the Friday. So let me jump to the intraday charts, that is the 5-minute chart on the Nasdaq Futures, and show you my conclusions and what have I learned from it. So if you go to this 5-minute chart, that is the intraday chart, the first thing that I wanted to discuss is my game plan going into Friday was there is a very little to no news releases. So what do I mean over here? I mean that on 6:45, that is in the first 15 minutes of the session, all the important news data releases are going to get over. So once the S&P manufacturing and S&P composite PMI gets released, my game plan was I will wait till that news data release, and then I will see what positions I can take. So as you can see on the daily chart that we are overextended on the upside. So I was looking for a level in which I can have a good short entry. So what level should I believe? So as you can see in the market action, we opened in a very humble manner. We had a huge wick on the upside, signifying that there are a lot of sellers. But then slowly but surely, what we did is we kept on building higher. Now, in front of me, there were two options. One is the R1 pivot level, that is this one, and the other resistance level R1, that is this one. Now, you may ask, how can there be two R1 levels? One is the Fibonacci type pivot level, and the other is the standard pivot level. Now, the $1,000,000 question to ask is, which pivot level should I trust? And why should I trust? So to answer that question, you need to go to the daily analysis and see. Now in the daily analysis, as you can see, the basics of technical market tells you that for any security or a stock to go higher, it needs to eliminate the previous day's high. And for any stock or security to go lower, it needs to eliminate the previous day's low. So my thesis going forward is, as you can see over here on the daily chart, the highs of the yesterday were sitting at 16,883. So the closest level of resistance that is near 16,883 is this second R1 level. So that is why I waited, and that is why all of the intraday traders need to wait until this level is achieved, or they can start shorting near this zone and not this zone. So slowly but surely market, achieved this zone. And as you can see, when we achieved this level, there were a long wicks on the upside showing that the sellers are dominant over here. And look what happened after that. So after that, once this resistance level was achieved, then the market sold off heavily. So the markets gave us the opportunity to short over here at the R1 level, and also over here at a bearish crossover. So over here, the 5-day EMA crossed the 26-day EMA on the downside. So this was also a bearish confirmation. And then slowly but surely, what happened is we continued to fall downwards, and near the P0 level, that is the neutral level of the pivot level, we really stopped selling. So what you can take from this, over here there are long wicks on the downside. So that means the buyers are active in this zone. So this is my take on the intraday time frame. What happened is, you can also take the confirmation from the wicks. So if you see the wicks is constantly making higher wicks on the lower side. So if you can see, the buyers took this level from here to here. They took this level from here to here. They took this level from here to here. So the buying interest at the S1 level is very, very high. Now, if you go to the intraday, charts, if the markets have to go lower, the VIX has to go higher. So, but that didn't happen. So when we got the intraday low over here, the VIX was having a resistance sitting at R1 over here. So if the VIX cannot close above the R1, or if the VIX cannot go higher, then there is no chance that the market can go lower. So that's the inverse correlation between the VIX and the Nasdaq futures. And this was also a clue that you could have taken for taking the decisions in the intraday. I'm also going to show you, two other tools that I use on the intraday basis for professional day traders, using which you can have confirmations. So let me show you a sneak peek of it. So as you can see over here, this is my, NinjaTrader platform, charting platform. And don't be overwhelmed. I will be teaching you everything in the training and education series as well. But I wanted to show you how you can spot the top and how you can, take a very good risk to reward ratio bet. So as you can see, this is the first, panel. The top panel is the price action, normal price action, that is a 5-minute candle. And the bottom panel is basically a cumulative delta indicator. Now, what does the cumulative delta tell us? Delta is basically a difference between the buyers and the sellers. So as you can see, in the normal, market condition, the price and the delta should go hand in hand. So what does that mean? When the price is going up, the delta ideally should go up. But as you can see over here around 840, the price did make a new high. So over here a new high, over here a new high. But look at what is happening in the delta. Over here delta made a new high, but it failed to make a new high over here when the price was making a new high. So delta is making lower highs and the price is making higher highs. So this is a classic case of divergence. So when this happens, what do we conclude from it? What is the inference? The inference is if the delta is failing to make a new high, that means the buyers are not aggressive. If the buyers are not aggressive, then definitely what is going to happen is the markets are going to go down. And as you can see over here, that is exactly what happened. So you could have taken the confirmation from the cumulative delta as well. And don't worry, I am going to show you and explain you each and every tool that I use with all the settings with configuration. So don't be overwhelmed, but this is only for professional day traders, specifically looking for the reasons and, in trying to increase their accuracy and, getting a good risk to reward ratio trade. So this is for them. So this is just a sneak peek of what I do on day trading basis and what, confirmation that I look for, and this was basically one of the confirmations to find the top. So coming on to this normal, trading view indicator, the Qs were also, pretty much in sync in the entire session. So no worries about that. There was no any divergences. So that's my take on intraday time frame. I think, the complexity, don't worry about all these moving parts. As I said, I'm going to create a video showing everything, all the thought process that goes into decision makings of buy and sell, and why do we do it, and we try to do it in a most unbiased way possible. So stay tuned for those as well. So this is my take on Friday's intraday market action. And now I would like to thank you for watching and taking time for viewing this video. And if you find value in this content and if you find genuine knowledge, then please feel free to like, share and subscribe so that others may get this video as a suggestion from the YouTube algorithm. And until that time, see you guys in the next video.